Hi students, since we have finished our chapter on fixed asset and we have learned about the three kinds of depreciation methods that are straight line depreciation, the declining balance depreciation, and the units of activity method. So here let us try to solve a problem regarding the depreciation methods. And as you can see, we have a problem here, and this problem is about Pablo Company. And I have already made a depreciation schedule here for doing the maths, and I have done it only because I want to save some time rather than wasting some time on formatting. I wanted to just expedite the process by making the format beforehand. So here we have the problem of uh, Pablo Company. So it says that in recent years, Pablo Company purchased 3 machines. Because of heavy turnover in the accounting department, a different accountant was in charge of selecting the depreciation method for each machine, and each selected a different method. Information concerning the machines is summarized below. So here it says that since 3 different accountants selected the depreciation method for these 3 machines, they have chosen different methods for each. So we have machine 1 that uses straight line depreciation method, machine 2 that uses declining balance method, and machine 3 that uses units of activity method. So now we have been given some information regarding the machine. So let us just go through the informations first. So for machine 1, it was acquired on 1st of January 2007 with a cost of $105,000. The salvage value of this machine is $5,000 and the useful life in years is 10. So that means it has a useful life of 10 years. And the straight line depreciation method is used here. In case of machine 2, the date of purchase was 1st of January 2008 and the cost of the machine is $150,000. The salvage value was $10,000 and the useful life in years is 8 years. So, and it uses a declining balance depreciation method. The third machine was purchased on 1st of November 2010. The cost of the machine was $100,000. The salvage value was $15,000 and it has a useful life of 6 years and it uses a units of activity method. For the declining, so there are some additional informations given as well. So it says that for the declining balance method, the company uses the double declining rate. So if you can remember, this means that whatever the straight line depreciation rate is, it must be doubled in order to get the double declining rate. So for machine 2, the depreciation rate should be double the depreciation rate of the straight line method. For the units of activity method, so it is now talking about machine 3. Total machine hours are expected to be 25,000. So in case of units of activity method, we want the useful life to be expressed in units. So here it is given in hours. So it says that it is expected to have 25,000 machine hours. So this is the useful life for machine 3, and actual hours of use in the first 3 years, since it was purchased on 2010. So for 2010, it is 2,000 hours. For 2011, it is 4,500 hours. And for 2012, it is 5,500 hours. So now let us consider what has been instructed. So we are instructed to compute the amount of accumulated depreciation of each machine at December 31st, 2010. So we are asked to calculate the accumulated depreciation of each of the machine on December 31st, 2010. So we don't have to do the maths for the entire useful life. Rather, we will have to do it for a few years. For machine 1, it is only 3 years. For machine 2, it is only 2 years. And for machine 3, it is only a few months. So now let us see how we can go about it. And in, instruction B, it says that if machine 2 had been purchased on May 1st instead of January 1, what would be the depreciation expense for this machine in 2008 and 2009. So here it is said that an additional information has been given which says that if machine 2 was purchased on May 1st instead of January 1st, what would have been the depreciation expense for machine 2 in case of in the year 2008 and 2009. So this is the entire problem that we will be solving today, and we will be going step by step. So initially we will be doing the problem for only machine 1, then we will start for machine 2, and then we will do it for machine 3. So we will go step by step. So first, let's just start with machine 1. So it says that it uses a straight line depreciation method. And if you can remember, in case of straight line depreciation method, the first step that we need to do is to determine the depreciable cost of the machine. And how do we do that? We deduct the salvage value from the cost of the machine in order to get the depreciable cost. So now let us consider the cost of the machine for this problem is $105,000. The salvage value is $5,000, and so the depreciable cost is $100,000. So now we know that the useful life of the machine is 10 years. And if we want to know what is the annual depreciation expense, we have to divide the depreciable cost by the number of useful years. And so we get the annual depreciation expense as $10,000. So we have $10,000 here. And in order to get the depreciation rate, what we do is that we just use 100% divided by 10, and that equals to 10%. So now we will go to the depreciation schedule. As you can see, I have already made the format for the depreciation schedule. However, though I have written all the 10 years, because in case of machine 1, the useful life is 10 years. However, in this problem, it has been instructed to find out or compute the accumulated depreciation of each machine at December 31st, 2010. So in order to do this problem, to solve this problem, we will have to do till this part. So this is the accumulated depreciation that has been asked to be computed in this problem. So let us start. So we know we have the depreciable cost of $100,000. So we have $100,000 as the depreciation cost, multiplied by the depreciation rate is 10%, and so we get the annual depreciation expense by multiplying the depreciation cost with the depreciation rate, that is 10%, and we find that the annual depreciation is $10,000. So if you can remember that in our discussion, we said that in case of accumulated depreciation for the first year, it will be the same as the annual depreciation expense. And why is so? It's because we don't have any previous balance of accumulated depreciation. And that is the reason we only put the annual depreciation expense, the current depreciation expense, as the accumulated depreciation for the first year. And then we get the book value. So how do we calculate the book value? We calculate the book value by cost minus the accumulated depreciation. So I have just given a star and has written it over here. So in case of accumulated depreciation, so it will be in bracket. For us, this is the actual cost of the machine, which is this thing. So we have the cost, which is $105,000 minus, it should be the accumulated depreciation for the year. So that is 10,000. So this should be what we understand. So I have just given an asterisk sign in just for you to remember how we calculated this book value. So it is $10,000. Sorry. So it is 90. So our book value at the end of 2007 is $95,000. So we have, since we are doing the straight line depreciation method, so we will have the same depreciable cost for all the 10 years, and we will have the same depreciation rate for all the years. And now if we calculate, if we calculate the annual depreciation expense, it will be the same as well, because we are multiplying the same two figures. So the annual depreciation in case of straight line depreciation method is the same. So we will have to do till 2010. So for this, what we do here is that when we now calculate the accumulated depreciation, we know it is the summation of the previous year's accumulated depreciation plus this year's annual depreciation expense. So it comes to $20,000. So now if we calculate the book value, we will have minus, so we have the initial cost minus the accumulated depreciation. So it comes to this figure. Then we have, again, we will do the same thing because we have to do it till 2010. So for this year, it is the previous year's accumulated depreciation plus the current year's depreciation expense, and it comes to this, that is $30,000. So when we just use the original cost of the machine minus the accumulated depreciation, it comes to 75,000. And now we will be going to 2010. So we are supposed to do it till 2010. So in case of 2010, the previous year's accumulated depreciation balance is $30,000 plus we have the current year's annual depreciation expense is $10,000. So the accumulated depreciation for 2010 is $40,000. And now if we just calculate the book value, it is not required for this maths, but still just let us finish this row, and it is 40,000. So it comes to, so sorry. So very sorry, I think I've put an additional zero here. Yeah, so this is what has been asked by us. So this is the answer. So we will say the, for machine one, the accumulated depreciation for at December 31st, 2010 is $40,000. So this should be the answer to the first machine, in case of instruction A.